Welcome to our comprehensive Candlestick Analysis Report for July 29, 2025. Today's market close revealed a fascinating interplay of bullish and bearish forces, with key sectors and indices painting a vivid picture through their candlestick formations. Let's dive into the action-packed session that had traders on the edge of their seats. The technology sector stole the show today, surging an impressive 6.5% and adding a staggering $72 billion to its market capitalization. Software giants and IT service providers led the charge, with both sub-industries posting gains of around 7% each. Hardware manufacturers weren't far behind, clocking in a solid 5.8% increase. The sector's daily candlestick formed a textbook bullish engulfing pattern, signaling that buyers have wrested control from the sellers and are pushing prices to new heights. This powerful formation suggests that the tech rally may have more steam left, potentially setting the stage for fresh all-time highs in the coming sessions. Shifting our focus to the basic materials sector, we observed a mixed bag of performance with an overall positive tilt. Industry leaders like Freeport-McMoRan and Nucor Corporation posted notable gains, contributing to the sector's 2.7% climb and a $19 billion boost in market cap. A bullish hammer candlestick materialized near the day's lows around 11:30 a.m., indicating strong buying interest emerging to defend key support levels. This classic reversal pattern hints at potential upside in the days ahead, particularly if confirmed by follow-through buying tomorrow. The energy sector faced headwinds today, retreating 1.8% and shedding $14 billion in market value. Oil majors like ExxonMobil and Chevron bore the brunt of the selling pressure, with their stock charts displaying bearish engulfing patterns at recent resistance levels. These ominous formations suggest that sellers have regained the upper hand, at least in the short term. Keep a close eye on key support levels, as a breach could trigger further downside momentum. Financial stocks presented a nuanced picture, with the sector eking out a modest 0.6% gain, translating to a $7 billion increase in market cap. Major banks like JP Chase and Bank of America held their ground, forming hammer candlesticks at crucial support zones. These bullish reversal patterns, coupled with above-average trading volume, hint at potential buying opportunities for nimble traders. However, the presence of doji candlesticks in regional banking stocks reflects ongoing uncertainty in that subsector. The healthcare sector played defense today, consolidating recent gains with a series of spinning top and doji candlesticks. This indecisive price action resulted in a marginal 0.2% uptick and a $3 billion rise in market capitalization. Pharmaceutical giants like Johnson & Johnson and Pfizer traded in tight ranges, suggesting a period of equilibrium between buyers and sellers. Traders should monitor for breakouts from these consolidation patterns, as they often precede significant directional moves. Diving deeper into the candlestick structure across major indices, we observed a fascinating tug-of-war between bulls and bears throughout the session. The S&P 500 opened with a gap down, but quickly found support. Forming a bullish engulfing pattern on the hourly chart by 10:30 a.m., this powerful reversal signal sparked a wave of buying that persisted into the afternoon, culminating in a 1.4% gain for the index. The Nasdaq Composite mirrored this bullish sentiment, with its daily candlestick showcasing a long lower wick and a solid body. This hammer-like formation, coupled with the tech sector's strength, points to robust demand at lower levels. The index closed up 2.1%, outperforming its peers and reinforcing its leadership role in the current market environment. Meanwhile, the Dow Jones Industrial Average lagged slightly, posting a 0.9% gain amid mixed performance from its constituent stocks. A notable doji candlestick formed during the lunch hour, reflecting a brief period of indecision before buyers reasserted control in the final trading hours. From a technical interpretation standpoint, today's session reinforced several key themes. The emergence of bullish reversal patterns at support levels across multiple sectors suggests that buyers are actively defending these zones. This price action, combined with the strong close in major indices, paints a cautiously optimistic picture for the near term. However, traders should remain vigilant, as bearish engulfing patterns and hanging man formations were spotted at local tops and some overbought names. These warning signs could foreshadow potential pullbacks or consolidation phases in the days ahead. Support and resistance levels were clearly defined by today's price action. Key support zones were validated by the appearance of hammer candlesticks and bullish engulfing patterns at recent lows. Resistance areas, on the other hand, were marked by repeated pullbacks and the formation of bearish reversal signals, like hanging man candlesticks at recent highs. It's worth noting that trend lines and moving averages continue to play a crucial role in defining dynamic support and resistance levels. The 50-day moving average, in particular, acted as a springboard for buyers in several large-cap tech stocks, further cementing its importance as a technical reference point. Sector rotation dynamics were on full display today, with growth-oriented sectors like technology and consumer discretionary leading the charge. The pronounced bullish engulfing patterns and above-average trading volumes in these areas suggest that institutional money is flowing back into beta names. Conversely, defensive sectors like utilities and consumer staples lagged, printing a mix of spinning tops and doji candlesticks. This price action reflects a degree of market indecision and potential profit-taking in these traditionally safe haven areas. As we look ahead, the market sentiment derived from today's candlestick analysis leans cautiously bullish, with a particularly positive outlook for select growth sectors. The prevalence of reversal patterns at key support levels hints at the potential for continued upside, especially if confirmed by follow-through buying in the coming sessions. However, the presence of resistance at recent highs and the formation of bearish patterns in some overbought names warrant a measure of caution. Traders should remain alert to the possibility of short-term pullbacks or consolidation phases, which could offer attractive entry points for those looking to establish new positions. In conclusion, the July 29, 2025 candlestick analysis paints a picture of a resilient market pivoting around critical support and resistance levels. The technology sector's impressive 6.5% gain and $72 billion market cap increase, coupled with bullish engulfing patterns across major indices, suggests that buyers are in control for now. However, the mixed performance in sectors like energy and the presence of bearish signals at local tops remind us that volatility remains a constant companion in these markets. As we move forward, integrating this technical analysis with fundamental insights, sector trends, and macroeconomic data will be crucial for navigating the complex market landscape. Keep a close eye on key reversal patterns, volume trends, and sector rotation signals to stay ahead of the curve and capitalize on emerging opportunities. Remember, in the world of candlestick analysis, today's patterns often hold valuable clues for tomorrow's price action. Stay vigilant, trade wisely, and may the charts be ever in your favor. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.